College Board has a really good EFC calculator. Every college technically is supposed to have their own. It's called the net price calculator. But the reality is that most kids are going to be applying to more than one school. So to save you the time of having to go to like 4 or 5 or 10 different colleges' websites and plugging in your information over and over and over, just go to this one place, plug in the information, and you're going to get the EFC. So I'm going to take you through this right now as a model. So you'll be able to see exactly how to do this. It's going to ask you a series of questions. Again, for most families, this is going to be, or all of them are going to be no's, but certainly read through them in case your situation is different. Go to the next page. And this is really important. Here you will have an option to select whether you want the federal methodology calculation, institutional, or both. I suggest you always select both because it's going to give you the institutional and federal methodology in the same report. Click Next. And this is where you start filling in the family demographics. I'm just going to make this as an example. So here we are in California. And it's going to ask you about the family members as well as the student's age. It's really important for you to put in all of the information, especially about the ages, in the year that your student is actually going to be filling out these forms. So if you have a high school sophomore, 2 years from now, all right? I'm going to put in the parent real quick. This is dad. Let's say dad is 50. This is mom. Let's say mom is 45. And this is a brother or sister, sibling. And let's say they're going to be 2 years behind, maybe 16. And this is where it's going to start asking you for the financial aid questions. This is similar to the FAFSA. It's a little more simplified and streamlined, which is a good thing. Any question that you have, there's a question mark that you can expand, and it'll show you exactly what line of the tax return for you to reference. Makes it much, much easier to find the figures. But I'm just going to go ahead and just use some examples. So let's say this is a family that earns $150,000 a year. Student has 0 income. Between the two parents, they both earn, say, $75,000. Student earns 0. No combat pay, no untaxed benefits is money that you can, you're deducting from your wages, things like 401k contributions, pension contributions, HSAs, etc. So let's just say you're putting in $10,000 into your IRAs. I'm going to put 0 on everything else. And this is where it's going to ask you how much taxes you've paid. Again, look at your tax return from the most recently filed return and put in this information. If you have a clear sense of what your income is going to be in the year that you're actually filling out these forms, again, if you're a parent of a high school sophomore, that's going to be 2 years from now. Junior, 1 year from now. Senior, present. Then you can put the estimated values as well. But let's just say this family paid $15,000 in taxes. They didn't have any extra expenses. And this is now where you put in the value of the asset. I'm just going to follow my example. And let's say here, this family has $65,000 in savings. The student has nothing. Let's say the kids both have a total of $20,000 on 529 plans. And see, it says value of siblings' assets because they do ask for everything. Home equity, let's just say in this example, the property is worth $1 million. Let's say they have a mortgage of $500,000, maybe another $100,000 of expenses. So $600,000 can be deducted. Net value is $400,000. Student has 0. This is where it says other real estate and investment equity. I have $50,000 in the brokerage account. No equity in the business because let's just say I have a business, but it employs less than 100 employees. And here's a question. Do you have more than 100 employees? No, we don't. Value won't count. And then if you own a farm, you do want to put a value. If you don't own a farm, don't put a value. But the government does give you a break if you own a farm, and especially if you live and operate a farm. So the value of the business is going to be greatly diminished. And then the trust equity is any money that you may have or your child might have that's set aside in their name. So if you have some of the older college savings accounts like an UTMA or an UGMA, those are type of trust or savings accounts that were used for college before. It's basically a trust account. You'd have to put the value for that. If parents or grandparents created a separate trust and it's already in the name of your student, it has to be disclosed as the student's trust asset. Unfortunately, it's going to get counted at 20%, but if your student owns it, it has to be reported. In our case, I will say 0, and we're going to see the results. So here you go. A family, if you remember, that earns $150,000 in this example will be expected to contribute $37,926 under the federal methodology and $48,000 from the institutional methodology. Now, you might notice this and say, well, why is the student expected to contribute $2,250 even though they had no assets and no income in their name? Well, most schools that use the CSS profile and follow this institutional methodology will just expect that the student's going to pay that amount no matter what. Who knows why they do that, but they do. Bottom line is, you'll see the difference. So if your student is likely applying to only the colleges that use the FAFSA, you can expect this to be a pretty close estimate of your EFC. So if, let's say, your student is going to a school that's going to cost $45,000, you just take 45,000 minus 37,926, and that's going to give you your need. Same thing is true if your student applies to an $80,000 school. Depending on the methodology, you put in this number, and it's going to give you the need.